All right, or Akintoye Oyelaku now joins us. Good morning, Akintoye. Thank you very much for joining us. Well, talking about the foreign trade statistics, based on that report published by the MBS, total trade fell 9.9% year on year in the fourth quarter. That's despite the contraction. Imports climbed 10.8% year on year to 5.3 trillion in the fourth quarter, relative to what was recorded in the fourth quarter of 2019. Now, regardless of the pandemic, we saw this higher records. What was the major driver of the significant increase we've observed in the import data?
All right, good morning. Thank you for having me. So based on the statistics that we got from the CBN, like you rightly said, despite the fact that total trade for Nigeria contracted in full year 2020 compared to the previous year, we saw that imports rose significantly. And the major driver of this increase that we saw was the inflationary pressure which was present across the world due to the COVID-19 stimulus that most governments were implementing to support the economy. So as a result of this, we saw that the import of manufacturing goods, which contribute around 64% to the imports trade for 2020, it grew by 6.5% year on year. Also, when you consider the fact that in 2020 we saw multiple devaluation of Naira across the exchange rate windows, this also supported an upward trend. So putting those factors together, we saw that import figure rose significantly despite the contraction in trade for 2020.
Well, as against what we observe in the imports data, the value of export plunged by 33% quarter on quarter to 3.2 trillion naira in the fourth quarter of 2020. In the same vein, full-year export declined sharply by 34.8% in 2020 when compared to 2019. What was the major driver of this decline, and what should we expect this year?
All right, so for the export side, crude oil remains the major component of our exports. Historically, it contributes around 80% to the country's export. So in 2020, due to the COVID-19 disruptions, weaker economic activities as a result of the global economic lockdown, which led to sharp contraction in demand for oil. And also we had high inventory level, and not to forget the OPEC plus output cut quota. All of them which resulted into lower oil prices. So if you combine all these factors together, this led to a sharp contraction in oil export. And given the weight of the contribution that the oil export has on total export, we saw that it pulled down the export figures for 2020 compared to what we had in 2019.
Right, if we are still looking at that statistics and talking about now the deficit there is about 7.38 trillion naira. Is this a concern for you as an investment analyst?
All right, so majorly we know that the major driver of this deficit that we saw was the COVID-19 disruption on both supply and demand chain. So we saw that in 5 consecutive quarters, we saw deficit recorded in the foreign trade statistics for the country. And if we consider again that 2020 is an outlier, given the fact that we had disruptions of COVID-19, and then we are back to a close to pre-pandemic levels now. Economic activities are improving. So we expect that in 2021, there's going to be an improvement in terms of foreign trade figures for 2021 relative to 2020. This is due to the fact that economic activities are improving, oil prices are recovering, vaccine rollout, and the fact that we expect that at some point in time, OPEC is going to ease the output cut quota, which is also have a positive impact for the country's exports or trade figures for 2021. So we expect to see an improvement in 2021 generally.
Well, we keep talking about non-oil exports, but crude oil still continues to dominate the country's exports by a disturbing margin, accounted for 9.44 trillion naira last year. That's an equivalent of 75% of the total value of exports. So does this say that Nigeria is not doing enough to push its non-oil exports?
That has been the story since the discovery of oil. Nigeria has been dependent largely on crude oil, and that's why whenever there are shocks in the crude oil market, Nigeria is always suffering from it significantly. And the dependence of oil has led to weaker development of the non-oil sector, and developing those non-oil sector will be very critical at this point, given the fact that the world is in a phase of global energy transition. So everyone is trying to move away from fossil fuel like crude oil and coal, given the negative impact it's having on the environment. We are seeing hotter temperature, sea glacier is melting. We are having high level of flooding across regions, across the world. So a lot of countries are moving towards adopting renewable energy, and we are seeing improvements in technology. And what this means is that if Nigeria does not diversify away from dependence on oil, by the time we are going to see that transition, Nigeria will be significantly affected by that transition due to the exposure to the oil sector.
Now, on Wednesday, we saw Brent price tapering marginally to about $66, even though it went up a little bit this morning after reaching a peak of $70. That was on Monday, as investors booked profit ahead of the release of U.S. inventory data. Now, with the OPEC Plus quota still in place, how much do you think this would be sufficient to keep the oil market stable?
All right, so OPEC has continued to hold a major stake in terms of when you look at the market share for the oil supply globally. In 2019, OPEC had around 35% market share, although the US is also a major force when you look at the fact that the US is the biggest producer of oil across the world, and also the fact that the fracking technology has supported this this trend for the US. So the US contributes around 19% to the global oil supply, judging from 2019. So the US also has a major role to play in stabilizing the oil market. If the US should increase production, this would definitely affect the price of oil in the market. However, given the fact that the US suffered from weaker oil prices in 2020, I think the US will be cautious about increasing its production. We're not likely going to see a surge in US output, given the fact that the fracking technology is quite expensive to produce with. So the US will also be looking at improved prices. So we believe that with the US output, current output level, and OPEC Plus quota being maintained, and vaccine rollout expected to continue to improve in 2021, we expect that this will be key to stabilizing the oil market in 2021.
Well, coming back here in Nigeria, still following the OPEC Plus meeting, about 300,000 barrels of oil from Agbami has now been classified as condensate, increasing the opportunity to boost production in a high oil price environment without breaching the OPEC Plus quota. In what ways do you think this would impact Nigeria?
All right, so the concentration of Agbami 300,000 barrels per day as a condensate is quite passive for Nigeria. If you recall, in 2020, we had weak production of oil due to OPEC Plus quota and weak demand globally. And with this improvement in condensate that we are going to have, we can produce without necessarily breaching the OPEC Plus quota agreement. We are going to see a quicker recovery for the oil sector in subsequent quarter compared to what we had in 2020. So this is very positive on that aspect. And also, if you look at the fact that it's going to the oil sector, the oil commodity is a major component of the export for Nigeria. So an improvement in production will also support exports value for 2021 compared to what we had in 2020. Again, government revenue is largely tilted towards the oil sector. Around 65% of government revenue is from the oil sector. So an increase in households, given the fact that we have high oil prices, will definitely support revenue for government. And lastly, when you look at the external reserve balance, the oil commodity is a major boost for the foreign reserve. We expect this to boost the external reserve, and the central bank will be able to support the naira across the exchange rate windows.
All right, thank you very much, Akintoye. We do appreciate your time always. Do have a great day. Okay, commodities market update is next.